this rate, if the Fed doesn't come out and go, oh, actually, we didn't quite mean quite so harsh. We're not so harsh. No, we don't bad things to happen. If they don't come out and basically do a U-turn in the next few days, the roof's going to come in, because the dollar is a runaway train. It's all about the dollar. The dollar is a runaway train, and it's crushing everybody else's currencies.
Right.
And you crush their currencies, you're going to crush their economies, and you're going to crush everything. And their sovereign debt's going to default, and inflation's going to go through the roof, and it's all going to come unglued.
After the near collapse of the entire British pension system, there have been increased concerns that more interest rate hikes from the U.S. Federal Reserve and other central banks will plunge the world's key economies into severe economic declines. Several economists, fund hedge managers, and financial analysts have warned that the Fed's aggressive interest rate hikes, which are strengthening the dollar and collapsing other major currencies, could take us back into an 80s-style recession. According to reports, the United Nations has called on central banks to stop their interest rate hike campaigns. The United Nations Conference on Trade and Development, UNCTAD, warns that more monetary tightening and rate hikes could result in a recession worse than that experienced after the global financial crisis. On Monday, the UNCTAD published its Trade and Development Report 2022, expressing concerns that an unduly rapid tightening of monetary policy in advanced economies in combination with inadequate multilateral support could turn a slowdown into a recession. The report stresses that would trigger vicious economic circles in the developing world, with the damage more lasting than after the global financial crisis or COVID shock. According to the report, the Federal Reserve's actions especially are hurting growth in developing countries. This year's interest rate hikes in the United States are set to cut an estimated $360 billion of future income for developing countries, excluding China, and signal even more trouble ahead, the report notes. Instead of more rate hikes, the report suggests that regulators should set price caps funded by one-off taxes on the unusually large profits being made by energy companies to fight inflation. In a recent interview with Kitco News, Clem, the CEO of online blockchain, discusses his outlook for the markets as the globe edges closer to a more severe economic decline. Please watch, share, and like this video as Chambers discusses the incoming crash, Fed policy, and the impact on the crypto market. Also, ensure you drop your comments and observations in the comments section below, subscribe to the channel, and turn on post notifications for more videos like this. Thanks and enjoy the video.
I've been saying for a long time we're going to get a W or an almighty crash. And we've had market action which is just short of the 25% that used to be considered to be a crash in the good old days when words like that were used. And the question is, I mean, this market is so moderated and or stroke fixed by central banks. It's all down to them. Now, it looked like we were going to have a nice sideways channel. Everything was going to be fine because the Fed wouldn't, let the roof come in. And then about several days ago, Jay Powell came out and said, there's going to be pain. We're going to be rising interest rates. We're going to keep going. Well, it scared the British market. And the Brits have come out and said, yeah, we're going to do stimulus. We're going to print some money. Yeah, it's nothing new there. But because America is going hell for leather for 2% inflation, according to the head of the Federal Reserve, it all seems insanity to, go around printing money and carrying on regardless. Basically the British government sovereign bond market almost collapsed. It's not Lehman Brothers, it's just a bank. It's a whole country nearly collapsed. And the Bank of England came out and said, oh, well, we're to spend £60 billion, it used to be $100 billion. Let's call it $60 billion on propping up our own sovereign debt. So if the Fed doesn't care about crashing, its allies' currencies, and they're going to get the inflation rates down to 2%, then, all bets are off, and there's going to be no W. There's going to be another leg down. Yeah, there's this big W. And, if you were as long as I was a few days ago, you want that to not break. And the same goes for gold. I mean, I've been loving on gold and it's been spanking me. And I'm out of gold, not my physicals, but all my paper gold, because it broke a W. You can see a W right there and then. And if it wasn't going to make that W and go on off and fly like a homesick angel upwards, and it breaks down through that, it then takes a big drop down, another leg. And you're looking at 1,400 on gold. But it's not the only one doing it. All the equities are doing it all over Europe, all over America. all these assets seem to be, even Bitcoin is doing its own kind of funny W. And if they break down, that's it. That's it. That you're into a serious .com crash style crash. And you're seeing NASDAQ at 8,000, that kind of thing, right? And it wouldn't be so bad if you didn't look at the NASDAQ chart and just see the same pattern that you saw in the .com crash right there, staring you right in the face. Yeah. And, then out comes Jay Powell, just as everybody was sighing relief that, it wasn't going to be too bad and everybody was going to be gentle with interest rates and no one was going to be, too brutal on it. He comes out and says there's going to be pain and we're going to be going bang, 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 raising interest rates. It's going to go, go, go. And we're going to push, push, push. And, that's it. That's it. He's got to eat crow in the next week or maximum 2 weeks. Otherwise, it's all over.
In his interview, Chambers, who heads the only London-listed company that develops blockchain technology products, compares cryptocurrencies to a better, stronger version of gold. He explains that the coming crash will take down many asset classes because the Fed will continue its aggressive rate hike campaign. But according to the freelance journalist, the cryptocurrency industry stands a chance in the coming storm.
I totally love crypto, but crypto is like it's like gold on crack. Yeah, it is the one that reacts fastest and the mostest, and is the wild child. And if the roof comes in, it's all going to get crushed. Absolutely everything's going to get crushed. The Flash Nautilus Patek Philippe you bought for 110 grand, it's going to be crushed. Your wine collection is going to be crushed. Your Picasso is going to be crushed. Your house is going to be crushed. Your collectible car is going to be crushed. Your equities are going to be crushed. Your bonds it's all going to get crushed, right? So if you can get out before that drop, you can buy it cheap, and that's my strategy. And if I'm totally wrong, well, I don't care. I mean, I'll just say, oh, got that one wrong. They came in and rescued the day. I'll invent some narrative that says I wasn't so stupid. But of course, the downside is so large that the current upside is so weak. You haven't really got a lot of opportunities to lose.
All right. And do you think the Ethereum merge that happened earlier in September, do you think that has any significant long-term impact on the price?
Well, I said at the time, it's a classic one, and I'm sure your viewers know it. You buy on rumor and you sell on fact. So it was going to go up to the merge, and then it's going to fall out, off its twig, and it has. Now, at the moment, there's only one person that counts, and that is Mr. Powell. And he's going to have to eat crow. He's going to have to look like a complete numpty real quick for anything not to go through the floor. And, so it doesn't matter if the long-term future of Amazon is great. In 2002, you could buy it for buttons. And we're going into that scenario. And there'll be great companies, fantastic opportunities to buy stuff that is totally, ridiculous that it's been pummeled so hard, because it's systemic. It's the dollar. And unless they get the dollar back under control, then it's all over. Because Powell came out and said there's going to be pain. And when everybody runs for the exit at the same time, that's when everything comes unglued, right? Mm-hmm. And the central banks and governments have done a great job of doing all these amazingly risky and spicy maneuvers economically. And they've got away with it by keeping their credibility. Well, we've got inflation, which had to happen because of what they did with the COVID response. And here it is. And now America's come out and said, we are going to squeeze this out very quickly, and we're not going to let it be a thing. And they've tried to manage inflation expectations, which they think is key to keeping inflation under control, by talking tough. And there's been effectively that set off a wave of panic. And if that panic isn't somehow stopped, and they can't do it by printing more money, can they? He can't go and say, oh, don't panic. I'm not going to be so hurtful after all. Maybe I'm not going to put so many people out of work like I suggested I might. And it's all going to be softly now. Matter of days after he's come out and said what he said, and anybody can find that statement and go see it on YouTube, can he turn it around and say, oh, no, you've taken me out of context. Do a Donald Trump. I didn't say that. No, it wasn't me. I didn't say that. No, I didn't say that. He can't do that, can he? So he has to follow through. And all this is what is happening now is because of the Fed policy and their tilt that they are going to rein inflation in quick time. And I can't see they can possibly keep their credibility and change their tune that fast. If they do, then we get the W. But I don't think they can. That's my call.
In other news, billionaire investor Ray Dalio has stepped down from Bridgewater Associates, the world's largest hedge fund, which he founded in 1975. In a series of tweets confirming his resignation, Dalio explains that he didn't want to hold on until he died. The 73-year-old billionaire investor is resigning from his position as the firm's co-chief investment officer, which he held for almost 4 decades. He also ceded his voting rights to the board of directors on Friday, September 30. According to his tweets, Dalio will remain a mentor to Bob Prince and Greg Jensen, the firm's co-chief investment officers. He will also serve as a member of the operating board's senior investor and mentor for the investment committee. One of his tweets reads, "Hopefully until I die, I will continue to be a mentor, an investor, and board member at Bridgewater, because I and they love doing those things together. That's a dream come true." With the sudden announcement, Dalio joins the list of several CEOs and executives that have made similar moves in the past months. Do you think everyone is trying to get out before the implosion, or is everything just one big coincidence? Let us know what you think in the comments section below. Also, ensure you leave your comments and observations about Clem Chambers' interview, hit the like button, and subscribe for more important market updates. Thanks for watching.